In this presentation, we will record the purchase of furniture and investments. In other words, we'll take some of our money out of the checking account, we'll put it into investments such as stocks and bonds, and we'll take some money out of our checking account and go towards purchases of furniture that will be depreciable and therefore will be on the books as an asset as opposed to an expense within QuickBooks Pro 2020, QuickBooks Desktop 2020. Here we are in Get Great Guitars file. We currently have the open windows open. In order to open the open windows, you can go to the view dropdown and select the open windows list. We're going to open up our main reports here first, think about what we're going to do, and then we will do it. We're going to go to the reports dropdown. We're going to go to the company and financial, selecting first the balance sheet report. Balance sheet as of the end of the year is going to be 12/31/20, the current year that we will be working in, 2020. If we think about this report, what we're going to do first is record information, take money out of the checking account, put it into an investment account. Therefore, checking account going down, another asset account, investments then, is the increase. Next, let's take a look at the profit and loss statement by going to the reports, selecting the drop-down profit and loss standard, changing the date range from 01/01/20 to 12/31/20. Nothing should happen to the profit and loss statement because all we're doing is taking one asset, transferring it to another. Let's take a look at the third report, the one I would get used to using a little bit more, that being reports, accounting taxes, the trial balance, which basically includes all the information in one in a much more smaller section, easier to see. 01/01/20 to 12/31/20. And here's going to be the trial balance. Once again, checking account should be going up. Checking account should be going down. And the investment asset then right below it, asset type of account or similar within the asset section, will then be going up. Now, if we go back to the home tab in the open windows, we could enter the check if we're going to write this as a check or a decrease to cash. The primary form that would be used for a decrease to cash would be a check. We can go to that here in the home tab, or we can go to the banking section and we can go to write check. However, I'm going to go to the check register first, which is the other way we can do this. Once again, I want to get used to us thinking about whenever cash is affected, whether or not it would be useful to simply go to the check register. Now, if you're going to be printing the checks out of QuickBooks and printing the checks, meaning you have physical checks that you bought from the bank that are used for the printing out of QuickBooks, you'll be entering the data into the QuickBooks system and then printing the checks, putting the checks into the printer, printing them. It may then be easier to use the checks here and then print them all out. However, if you're not printing the checks out of the system and just simply using this information to enter the financial data into the system, and then it might be easier to use the check register quite often as well. So we'll start off with the check register. We're going to go up top to the banking. We're going to go to use register. It will typically default to the checking account for the register unless you're in some other section as vendors or customers. That's the one we want. We then have the transactions we saw last time, both the one that we entered directly into the check register and the two that we did not. Anything that's going into cash will be shown within the check register. We're going to make this one as of 01/04/20. So January 4th, I know it's a little behind the transaction we did before. That's a little unusual. We're going to be going a little bit out of date here from time to time so we can group like transactions together. And so we'll do our best to group like transactions together. Now we're going to have to enter the check number. It starts with check number 1 because we've never written a check before. If we were to get checks, then even if we were to print them out of QuickBooks, they would already have check numbers on the check. That's one of the major kind of checking points you have with regards to checks. They're going to be pre-numbered on the form. Usually they start with something like 1001. So we'll pretend this is our first check, and the check on the pre-printed check 1001. We could be printing this check straight from, out of QuickBooks. However, we might have a checkbook and we're just entering this into QuickBooks to get the financial data into it. Either way, we want to keep the check numbers. Then we're going to say it's an investment. I'm going to say it's from Vanguard. Vanguard is an investment that you can invest in like stocks and bonds and other types of things. It's an online type of investment or set up. And so I'm not promoting them or anything. I'm just saying we're going to put money into stocks and bonds, and we'll use Vanguard as our investment. I'm going to say quick add. Now, quick add Vanguard hasn't been set up yet. I'm going to add it quickly. Question then, is it a vendor? Is it a customer? Is it an employee or other? Now, it's usually when we write checks, it would be a vendor. But this time, it's kind of like we're putting money almost into the bank. It's another kind of financial institution. So that's not quite right. So the best thing might here be other, because there's no grouping that really fits this. So I'll put it into other. And then make sure that you're in the deposit side. In the payment side, because this is going to be the money going out. So we're going to put it in the payment side. Obviously, it's a payment with regards to the checking account. That basically just means it's a decrease for the checking account. And then it's going to go into the other account, which will be an investment account. $12,000, it'll be the amount. Now, we don't have an investment account set up. Your typical practice that you want to do is say, all right, here's the drop down. I want to put it into an investment. Notice that it's defaulting down here to the expenses. That's normally what happens when we have a decrease. So it's actually defaulting to the bottom of the list in order: assets, liabilities, equity, income, and expense. This is our chart of accounts. We actually want to be up top. It should be an asset account, but there's no asset account set up for the short-term investments. We haven't set it up yet. So we have to include it now. So our default system, check the chart of accounts, see if there's one there. If not, then add it. So the way I add it, you could go into the add new up top. I like to just type in first. This will also give us another double check to see if this account is here. I'm going to call it short term, and notice it's populating down here to see if it can pick up an account in case I have it. Short-term investments. And then it's not there. I'm going to say tab, and then it's going to say, all right, we don't see that. Do you want us to add it? And we're going to say, yes, please. I'd like to add that. So we'll set that up. Once again, QuickBooks will default to an expense. And this is the tricky part. Whenever you're doing something that's not basically an income or expense account, you want to be careful that you get back in there and make sure that you have the right settings to go to the right place. This is not going to be an expense account. And why did QuickBooks default to that? Because we entered basically a decrease to the checking account. Normally, when there's a decrease to the checking account and you're putting it to some other account, you're putting it to some type of expense account. But in this case, no. In this case, we're going to put it to another asset type of account. So it's not going to be accounts receivable. You could think of it as a bank account, but I'm going to put it into other current assets. Other current assets, that's going to be the type. That's going to be the name. It's not going to be a sub account of any kind. Now, just note that as you think about investments, if you put it into multiple different kind of mutual funds or something like that, it's possible, like you could set this up to have the parent account being basically Vanguard investments possibly, or just investments in general, and then the sub accounts being the individual investments that you have entered into. In the business account, I wouldn't really recommend that too much because the business account usually isn't there for investments unless your business is as an investment broker. If you're doing detailed investments, you probably want to then take it out of the business, put it into your individual account, break it out into investments. The only reason we would have it investments in QuickBooks here on the business side would typically be that we just want to have a short-term investment holding account, not like a portfolio that we're managing for a long-term time period. However, QuickBooks can be used for personal investments too, and if you wanted to have more detail in your investments, you can do so. Just weigh the pros and cons of a lot of detail versus the time that will be involved in it. So we're just going to put it all into a short-term investment. We're going to say save and close. There it is. And then you could add a memo if you so choose. Now you could select the record down below. If you say enter, if you just hit enter on the keyboard, it'll typically record it. If you haven't turned off the little button that beeps, it'll beep when it's recorded as well. You want to be on the second line to make sure that it has been recorded. If we go back then to the trial balance or to the balance sheet, where in the balance sheet we found in the open windows, then it should refresh for you within the checking account. If we double click the checking account, changing the dates from 01/01/20 to 12/31/20, we then see our new transaction, the $12,000 in Vanguard. Double clicking on that, it will not take us to the check register, but to the form, the check form That's the driving form. So even though we put it into the check register, QuickBooks will in essence think of it and use the form of a check. So there is that, closing these two back out. The other side of it then should go to investments. Down here in other current assets, we have short-term investments. There's the other side of the 12,000. If we were to double click on that, we'd say here's the detail, date 01/01/20 to 12/31. There's the other side of the transaction. What happened to the profit and loss? Let's take a look. Profit and loss in the open windows, nothing happened to it because we didn't do anything to the income statement, no revenue or expense account. Looking at the trial balance, once again from the open windows, we see once again that the checking account is going to be decreasing, the short-term investments increasing. Now we'll record the purchase of furniture, we're going to say from Office Depot. I'm going to do one in the check register and then we'll use the deposit form. So if I go back to the home page in the open windows, we're not going to use the deposit form, then we'll use the check form. So we'll do the check register one more time for like a more standard type of purchase. However, it will be for fixed asset, not an expense account for office furniture. And then we'll do more office furniture being purchased, but this time using the right check form. So we're going to go back up top. We're going to go to the checking account. This is the register. If you don't have this open, you can go to the banking up top. You can go to the use register. We're in the check register. We're going to write another check. This one will be as of the 9th. I'm going to get there by just selecting the plus. I'm using plus on the keyboard to get to the 9th, January 9th, 2020. Notice it defaults to the check now, 1002. That should be the next check within our sequence, whether we be printing the check and putting the information into QuickBooks or simply writing from a checkbook. The vendor is going to be Office Depot. We're going to buy our furniture from. Now that didn't populate. If I hit the drop down, it's not there. I usually don't hit the drop down. I just type in, and if the vendor's already there, it'll help to populate for us. So it's not there, so I'm going to say tab. It's going to say, do you want to add it? I'm going to add it. I'm not going to use the full setup, but the quick setup. All I really need is the name. I don't need a lot of detail on the vendor. Adding it. Now this one will be a vendor because we're purchasing from a vendor. So we're going to say okay. The amount is going to be for the 16,000. And then the other side of it, where's it going to go? Notice that as we enter these into the check register, it's not populating the other side because we've never entered anything to Office Depot. However, in the future, next month, if we purchase something from Office Depot again, it will remember that for us and select the other account. Now, considering Office Depot, we may have multiple type of expense accounts we want to be posting to, because later we might be buying supplies. Right now, we're buying furniture and fixture. But just note, as we enter this first month of data, it's a little bit more difficult given the fact that every new vendor we have to also add the account to, which is something that will be memorized in the second month. So I'm going to select the drop down, and this time it's defaulting once again to the expenses. We don't want it in an expense here because we spent $16,000, pretty good amount of money, on furniture that's going to last multiple years. Therefore, it should be on the books as an asset that we would then depreciate over time in accordance with the matching accrual principle, as opposed to basically expensing it day one because it's a big item. We put it on as an asset, expense that cost over its lifetime, the useful life, using the format, using depreciation. So we'll show that in the adjusting entry process. We're going to go up top now, however, and look for that asset account. It's going to be furniture and equipment. That's going to be it. And you could put, again, the memo, you could put what you purchased or more detail here. I'm going to keep this blank this time. Then we will record, and let's check out what we have so far. Going to the balance sheet in the open windows, we see up top in the checking account, it should be decreasing. I will double click on the checking account, change the dates from 01/01/20 to 12/31/20, and we have the decrease in the 16,000. Double clicking on that, we see once again going to the check form, even though we entered into the check register, which is the driving form. That's what we would expect to see. Then we're going to go to the profit and loss. Nothing's happening here because we didn't expense the item because it's a large purchase, but rather put it on the books as an added asset to be expensed in the format of depreciation expense. If we look at the trial balance, we can see this a little bit more easily. There's the checking account and there's the furniture and fixture. Then we want to take a look at the next transaction. We're going to do the same thing, purchasing furniture again. However, this time we'll go straight to that form, the check form, and look at it instead of going to the register. So this time we're just going to go simply to the check form here, write checks, or we can go to the banking dropdown and write checks up top. Now, if we go through this again, I'm just going to tab through it. And when you see a form like this, it's great just to tab through it. You see that you got 103, the number 003. That being the check number populates automatically. That's what we want. Tab. Date is at the 9th. I'm going to select the plus button on the keyboard to bring it up to the 11th, plus to the 11th. Then we got the payee. Notice if you were, we're not going to purchase it from Office Depot again, but if you were to do that, I'm going to just type it in there. Notice how it populates for us now as you start typing in, or you can use the drop down. But if I was to go to Office Depot, I can type in here and notice what happens to the rest of the form. If I was to say tab to select that, it populates the account down here below for us because it memorized it from the prior time. Now, we're not going to use Office Depot. We're going to use Amazon. If I select the drop down, Amazon is not here yet. I'm going to add it. I'm going to say, okay, here's Amazon and tab. And it's going to say, we don't have it yet. I'm going to set it up. I'm not going to need all the data for it. I don't need Amazon's phone number or anything. I'm just going to quick add it. And then once again, this will be a vendor. So I'll select a vendor. Then we're going to need the amount, which will be 7,000. And address, don't really need an address here. So we're going to say memo. You could put a memo to specify what was the purchase. It kept the default of the furniture and equipment because we had the Office Depot there prior to this. And that is going to be correct as well this time. Now, Amazon, notice again, we'll keep the furniture and equipment, is something that will change. We can buy many different things. It might be an expense, might be different categories of expenses we buy from Amazon, might be furniture. So this default is going to save as furniture and equipment. Next time we go to Amazon, and you'll have to recognize, oh, well, that one doesn't work. I need to change it to an expense account, as opposed to the post office, oftentimes, which will default to postage expense or something like that, which will be the same every time. Typically, if you bought something from the post office, it'll pretty be straightforward. The utilities expense or the telephone company, it'll memorize those type of things. Normally, what we buy from the vendor will represent the same type of function, the same type of expense account. So we're going to then say, okay, let's go save and close. And then let's go back to our reports. If we take a look at the balance sheet and go into the checking account, and change the dates from 01/01/20 to 12/31/20. We see the new transaction of the 7,000. Double clicking on it goes actually to that check that we have then populated. Then if we take a look at the profit and loss, we see nothing has happened there. That's what we would expect because it's not an expense. We put it on the books as an asset as opposed to an expense to be depreciated over time, expensed over time. Then we want to take a look at the trial balance. Within the trial balance, we can see the checking account and the furniture and equipment account a bit more clearly, a bit more easily. Note then that this furniture and equipment is an asset. It doesn't stay there forever though, because in essence, we decrease it with a contra asset account, accumulated depreciation, and record the other side depreciation expense, which will be down below on the profit and loss. We'll discuss that at the adjusting entries section of the course.